Buying Apple stock and more of it. You got more than $56 billion now. I have to ask you that Apple has been suggested by some analysts who are pretty smart that they should get into the electric vehicle business and maybe do so by buying Tesla. You and Charlie Munger, your vice chair, did this years ago with BYD, buying electric vehicle and electric battery company. Would you suggest that Apple get into, or would you support it if they bought Tesla?
Well, I would support what Tim Cook does, but I think it would be a very poor idea to get into the auto business. It is not an easy business. And incidentally, the auto business is different than some. If you're a premier with Google on search, or you're a premier, with movies on Netflix, or whatever it be, there's a huge first mover and size and and network effect and all that working for you. You can win in autos one year and you lose the next. I mean, you've got a dozen big companies out there with resources. They're going to keep coming. They copy what you do. People move from one year to another. You don't worry about the fact that your whole life is on the iPhone, as opposed to, you don't want your whole life to be in one car or something. It does not give you a permanent advantage.
The always colorful Elon Musk, the CEO, got into a little trouble recently. If one of your CEOs did an Elon Musk type of tweet, I'm going private. Of course, they wouldn't go private, yeah. But they revealed something they shouldn't have. How would you have handled that?
Well, I think what you do, if you misspeak, and I can do it with you or somebody. I mean, if you misspeak, you correct it immediately. And if you've got a stock that's trading like crazy, you come on 3 minutes later and don't say I misspoke when I said lending secured. I meant to say I really think I can get funding. I mean, or something of the sort.
Bitcoin. You and Charlie have told Fox Business and made news calling it rat poison squared. Has anything changed to make you take a second look?
It will come to a bad ending.
Still. Well, you're not coming to a bad ending,
I hope
certainly. You're 88 years old. We just got word from Berkshire that you're not going to be hosting the MBA programs anymore. We had been able to see what we call Buffett University, where you talked to the students and took pictures with them. I mean, you were dancing with some of them. You're doing wrestling poses and Charlie's Angels. Are you feeling okay? Everything?
I feel great, and my doctor said I'm in way better shape even than I was a few years ago. I tap dance to work still, but the only drawback. And I did the students for 60-some years in different forms, and I loved it last year. But it does require committing yourself 6 or 7 or 8 months in future. I never would want to not show up or something of the sort. So I decided to pack it in on that.
My dad used to say at 88 to his patients, the mind gets soft, but the arteries get hard. So it kind of balances itself out.
Well, whatever it is, it's good. And 8 is lucky in China. So I got 2 8s going for me in a year that ends in an 8. So I feel great.
During the commercial break, we were mentioning that there's a Tesla now in space.
Yes.
You like Tesla?
Love Tesla. It's one of our largest holdings, largest in our overall fund. We think that if Elon Musk, SpaceX, can do what they did yesterday in space, right, they're going to be able to produce the Model 3.
But they're different companies. It's a whole different business.
Same brain trust.
Do you think, by the way, do you eventually want Tesla?
Science.
Do you eventually want Tesla and SpaceX to merge?
No, I kind of like things the way they are right now. I like the focus. I like the focus.
But in the Tesla story, and we also keep looking at that stock with one big question. If it walks and talks like a car, it must be a car. And so it has 4 wheels, it drives around. All cars will be automated with AI eventually, GM will. Everybody else trades at a 15 to 16 multiple. They trade as if every car is being shot to the sun at some stratospheric number. Yeah. Which happens first? All GM goes to a 300 PE, or Tesla goes back to 16? Because one of those two has to happen.
No.
Explain that part.
GM is a call option on the future. The future is electric. GM's not electric yet, right? It's the internal combustion engine all the way. The future is transportation as a service, software as a service. You need software engineers for that. GM has great engineers, but they're hardware engineers. They had to go buy Cruise Automation to get those software engineers in Silicon Valley. Then you've got 2 big model changes. Electric, software as a service, gross margins going from 20 to 25, which is the hardware model, to 85, 90%, which is the software as a service model. Completely different DNA. This is where Tesla is going. There's a third problem GM has. It's called distribution. By law, in many states, auto companies cannot do over-the-air updates. Tesla has been doing that regularly. It updates, it improves performance, it corrects mistakes, flaws. GM cannot do that and is really going to have to go maybe through Cruise automation and rebuild a company, right? And even if they were allowed to do it by law, how do most dealerships get their profits? It's service. What, is GM going to alienate its dealers? I don't think so.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.
When you talk about a big position, we own 1.5 million shares. Right. And it took us, over 3 years, 3.5 years to acquire the shares. So it's a $300 million investment. And that represents less than 1.5% of our assets. So basically, it's $300 million, a lot of money. On the other hand, it's 1.5% of our assets. But the assets that we can invest in, we have, most of the investments are, we have emerging markets, we have small cap, we have mid, so it doesn't fit in those pockets. But where it does fit, I have extraordinarily large positions where I can. And the reason I do is because this is, in my mind, one of the most interesting companies, maybe the most interesting that I've ever invested in. And so for my career, it's risky, but for my career, I've made 10 times, 20 times, 50 times, 30 times. In a lot of companies. I think in this investment from here, in the next 15 years, we can make 30 to 50 times our money.
You said it was risky, though.
30 to 50.
You said it was risky, though. Does that mean you think of it a little bit like a lottery ticket?
No. Nothing at all like that. But you're risky because you're dependent upon a number of factors that you can't control. And so you're dependent upon, to some extent, your legislatures, you're depending on some extent. So you are, with Tesla, nobody wants you to succeed except for the people who buy their product. And so the government doesn't, the car dealers don't want you to succeed because the cars don't need service. The unions don't want you to succeed because Tesla is remaking the way you make cars. So initially they have to prove the concept, then they got to prove they can make them, then they got to prove that they can make them profitably. Which
do you not worry about their cash burn? And let me ask you, related to the cash burn idea, so many people have looked at this transaction between Tesla and SolarCity, and the critique is that effectively he's using one business to support another, which is even more trouble.
So when I started to think about Tesla 4 or 5 years ago, stock was 33. We started to invest, and it's now 180, 190. Our average cost is over 200 now because I bought a lot of stock here. And when we started to invest, and I was telling people how excited I was about the company and how big they could become, people said, how can you think about that? If they get as many cars as you think they're going to get, there's 200 million cars in this country. I think they're all going to be electric someday. And there's 17 million cars a year produced in this country. I think they'll all be electric someday. But if I'm right, then what happens is that there's a tremendous demand for electricity. Where do you get it from? The electricity grid is not growing. They're not building new power plants. A new power plant costs $500 million, and they get a $50 million return on it. And you can't get the environmental permits, so they're not getting it. So now what's going to happen, and why this is such an interesting, this is not something that, okay, they're going to pay $5 billion for it, you can sell out the receivables for $2.5 billion, you pay $2 billion or $2.5 billion for it, it can make $400 or $500 million a year, steady state. That's not the reason you're buying it. That's financially, it's an interesting transaction, but that is not the reason you're buying it. The reason you're buying it is you are reinventing the electric grid. That's a bigger opportunity than cars. And you need to do it because you're not going to have enough electricity for cars. Do you know that in electric plants right now, if you think about the power that's used, do you know how electricity works? Do you ever take physics?
Years and years and years ago.
Okay, so there's a wire. And when you turn it on in the morning, you have peak power.
Right.
Peak power is because you're filling up that wire, that pipeline, with electrons. And then when you use the electrons, as you use it through the day, then you're picking up 1 or 2 electrons at a time. So initially, a surge in power, a surge in demand, then it goes down. The electric power plant, the grid, is not being used as its full capacity. You have to have more than you need by about twice. So if you can level load in some way, then you can have twice as much power produced from your existing plants as you do presently. Twice as much. So the reason this is such an interesting transaction for Tesla is they are going to be be massive producers of batteries at very, very low cost. When I started, it was $22,000 a battery for a car. It's now in the low teens. It's going to be $5,000 within, I guess, 5 years. An engine cost is $10,000 going up. The battery cost is $5,000 in 5 years going down. But what you're going to do, you're going to have big batteries in people's homes and solar power. So solar power is like a Trojan horse. So solar power are these roofs, amazing roofs. Everybody
we've talked about them on the air. They look like
they look amazing,
and they're no longer just those, ugly glass reflective things.
So that's going to start in a year from now.
Right.
But in the meantime, what's going to happen is that they will, because you're going to have solar, you don't get solar at nighttime, so the batteries save up the power, and then the battery can, you do it at night. But then the reason is that this is really interesting, is that the batteries, what they are, they're going to be a network, and they're going to allow the utilities to hook into the Tesla power network, and then instead of building those plants, they'll keep it level load.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the I right here to watch the latest from CNBC. Thanks for watching.